Good afternoon, everybody. This is again your continuous crude oil chart, and we're seeing some pressure today, about $1.50 lower as we are coming into the meeting, and we're definitely seeing some profit taking, very evident from last week's sharp two-day rally off of the unrest in Egypt, and the concerns about those possible supply disruptions have definitely eased. Today's low seems to be coming right back down to what has been the lower end of our range for the most part. Last week we did have a dip down to a point that we've really been trying to wait patiently to buy, and only to have it go through our buy point by about $1.50 and stop us out before rallying here. But we did feel comfortable buying there, and we're going to try buying there again if we do see it again. But some other news today: RBOB futures higher. There's a couple refinery outages in Aruba and Texas that are keeping that market supported. And nearby crude oil has been the weak leg of a lot of spreading between heating oil, RBOB, Brent crude oil, and that's something that we're gonna continue to watch. Eventually, at some point, those spreads will unwind, and this nearby crude will snap back up. But we've also got a large discount in the front month futures that has these refineries running at an unusually high capacity for this time of year, and a lot of the fundamental bears think that's just delaying the inevitable supply glut and putting it into the products during driving season so we can deal with it later. But you still have some friendly stories out there. Kuwait officials are saying that if this unrest in Egypt continues, we could see $110 crude oil. Iran right now holds the rotating OPEC presidency, and they're basically saying that they don't see any need for any kind of emergency meeting, even if we go up to $120 crude oil. So these guys are milking this story for all it's worth. They want to see the market go up, and they're trying to raise the cap on what the market feels is reasonable at this point. But again, we're going to have some minor support here at 87.50. Last week's low is down at 85.11, so that's another key point to watch. And then we've still got our long-term uptrend that's going to come in right around $82 a barrel. $93 has served as some very good resistance recently. Now on your nearby futures, this line right here runs right along your 100-day moving average. That was the uptrend that we attempted to buy, and we felt very comfortable doing that with everything that was going on in Egypt. And again, we ran through our buy point, created a new uptrend, and rallied sharply for those 2 days off of that story. So we're going to look at being a buyer again. Haven't really decided exactly on the price, but we'll have it out there for this afternoon's commentary, somewhere in between this uptrend and this uptrend. And we may even just go ahead and try and buy this 100-day moving average, risking below last week's lows. But something that we also feel could be a good trade is we've got the opportunity to go out into these April options that expire in just over a month, and we could potentially sell a put a few dollars below last week's lows at the $85 strike price, and sell a $100 call, and do that for a combination of close to $2. And that's probably going to be a trade where you can just look for time to erode out of these options, and if need be, lift one option or the other on a breakout between our current highs and last week's lows. But again, we still believe that the long side of the market is still the right place to be here with this long-term uptrend in place. And we've got the dollar index here, gotten down to almost the levels that we saw back in November going into the quantitative easing round 2. And all in all, we saw a very sharp move from these November lows back up to these late November highs, and we're still within that range. And we're extremely oversold. Definitely not out of the question to see some buying at these levels. And this area right here is 62% retracement of this move from November. And if we can get back above this area, get back above last week's highs here, this market could be a short-term buy. And we're going to have some targets, 50%, 38%. And this market could very reasonably scale between the 20 and 50-day moving average and make a nice, quick little move here. So we're going to be looking to potentially be a buyer of the U.S. dollar with this extreme oversold status here, and look for a continuation of this bounce.